Okay. So can you see the Excel sheet on your screen?
Yes, sir.
Okay. So now, last time also I covered a little bit in kind of a nutshell, but today what we will spend about, half an hour to 1 hour in filling this, ourselves in the class. Okay. So basically it's a valuation, sheet. Basically what the purpose is to explain again that, we have picked up an industry like cement industry. Now, in your 25 marks assignment, you have to choose your own industry. It can be FMCG, it can be, IT, or it can be any. Okay, that's up to you. And you have to just select a team of three and start doing this exercise. Okay. Now, basically, the purpose is to find, the whole purpose is to find the value of these shares, correct value of these shares, and whether we should invest in them or not at the current valuation. Okay. Now, the whole process will also help us to understand, whenever the new IPO is coming or an FPO is coming, the merchant bankers, they look at the valuation, okay, of the company, which is going to enter into the market. Like if it's an IPO, so then you decide on basis on the valuation compared to the peer group. Okay. Like, for suppose there's a new cement company which is coming in an IPO. So its share is not listed on the stock exchange. So then it will compare, how does, if what should be the price at which they should issue share, because the company has already worked for some time and it is coming with an IPO after, 3 or 4 years of, doing business, and it wants to raise capital. So it wants to know, what at what multiple, how many time, what should be the premium they should charge from the prospective shareholders. So this will, and then we will just go to one or case studies to understand that process, and then understand the law behind merchant banking, IPOs and all. So that will be the later part. First, we understand how the valuation takes place. Okay, so Ultratech. So what you have to do is that you have to enter the price. Okay, so all of you can just open this sheet and then at the same time open, you know, a screener, this thing, okay, window. So I'm just opening screener. So if I open screener here, okay, so I'll get the data. So the first company is Ultratech. Okay, so I just open Ultratech. Okay, and then the current price is 12,601, which is written here. So what you can do is that you can enter this 12,601 here. Okay, 12,601. Okay, fine. Now in the field one, which I've just shared, so maybe the things have changed because that was entered a long time. It was 12,113. Okay, so that price has gone up from the time when I entered the data earlier. Okay, so you just what you have to do as a practice, you have to just fill up all the data and just look at the filled data which is already there and find everything is in order. Okay, and then of course you can check also yourself. So then the market cap here. Again, the market cap can be, taken from. Uh, so which is the best way of, struggling with the sites? Again, if you want to open this, 371, 325. Okay, 371. Now, Mananya, you can just open the site and let me know the numbers. Okay, market cap is what? 3,71,000. Ashwin, Mananya, or we have Shishti. Okay, Mahalakshmi. Anyone? What is the market cap? Can you hear me?
371, 325.
371, 325.
Yes, sir.
Okay. So who was that?
Mahalakshmi.
Mahalakshmi. Very good. Now, we have to enter the enterprise value. For that, I will go back to the screener. So there's much faster way of, shuffling between the slides, but I'm not able. So now, what happens is that you just go to the enterprise value, which is 3,93,000. Of course, on your screen, you will not get this data because then you have to add here enterprise value. But what you have to do is that you find out the enterprise value, which is the formalized, the market cap, 3,71,325 plus the debt. So go to the balance sheet and look at the debt, which is, 24,102, which is the borrowings. So what you have to do is that, you have to go to Now, Mahalakshmi, can you prompt me? This is, debt, market cap plus debt. How much is debt?
1 second, sir. I'm just checking.
So,
24,102.
24.
102.
Now you have to minus the cash. Okay. So if you go to the balance sheet again and go to the cash here, okay, go to other assets and
Cash
cash
equivalents
equivalent. How much it is?
1673.
1673, isn't it?
Yeah.
So minus 1673. Minus 1673. Okay. And enter. So it comes to 3,93,754. And then you can always check this number. Okay. If you want, you can just check what the screener is saying. Go to the Ultratech tab and look at the bottom here. It is 393,754, and which is exactly coming here. Okay. So why do we, the enterprise value is basically, what does it mean? It means anyone? Shishti? Since you have attended all the lectures, enterprise value signifies what? Of course, this is a formula which we have entered. What does it mean?
Sir, it signifies the operational assets of a company. It has market capitalization plus debt, and we adjust for excess cash.
Okay, now excess cash is basically a cash which is lying ideal with a company and they're not using for, used for buying assets, operational assets. So that's why we minus it. Okay, so which means this is the current value of all the assets the company owns. Okay, from which they are doing business. Okay, whether they are fixed assets or the current assets, whatever. So in one way, it is called the current value of all the operating assets of the company. We reduce cash because it's not an operating asset. Then we go to sales. Okay. Then go to the sales of Ultratech and tell me what is the, the sale. Go to profit loss account. Okay. And go to the TTM number. That is the trailing 12-month number. Okay. So this is the last 12 months number. That means, this, if you go to, for example, just to repeat again, some students are not there. So if you look at the last 12 months data, if you add this all up sales, it will become the TTM. That means because the company has already announced the result of June quarter. So when we go to the profit loss account, it is up to only March. So that means it has 4 quarters of previous year. So here we have the 3 quarters of previous year plus 1 current quarter. So it tells me the sales of Ultratech is going up from 75 to 77. So 77, 752. So 77. So just let me know what is the figure, Mahalakshmi or whatever, whoever is prompting me. Yeah, 77, 752. Was this the number? Mananya, Mahalakshmi, anyone? The number is okay?
Yes, sir, it's correct.
Now, what happens is that we have the EBITDA, EBIT, and earnings. For that, what I have done, I have just scroll down. Okay, so we'll have a template here. Okay, so we have to fill this template, and then put a plus sign here so that the numbers can be picked up from here. Okay, or you have to just insert the formula here. Okay, up to this, the three columns G, H, and I will get populated when you fill up this entire thing. So operating profit. So operating profit, if you look at, so I'll just explain what is operating profit and then somebody can just guide me. So basically you look at the profit loss account of the company. Okay. So the operating profit is given, the TTM number 13,924. Okay, fine. And then, then we will 13,924. So we are going to enter that. 13,924. So 13,924. Fine. So you people have to, fill up this entire thing. Okay, fine. So tell me what is the other income of Ultratech. So go to, again, I'll do going to this thing so that the students who are not there, they can understand. So other income is this 703. Now other income has two, sub parts. which is, exceptional items and other normal income. Okay. So, of course, for the TTM, this breakup is not there. So we will use this breakup. Okay, fine. So 57 is basically the exceptional items. And but we're going to enter the other income, which is given 703, because this figure is 397, but we have to enter this. Okay, fine. So, but there is always, breakup of exceptional items, 57 and other normal income. So exceptional item is basically the company has suffered either a loss in this year. They have suffered a loss of 57 crores, and there was an other normal income of 454. So for calculating, the EBITDA, EBIT, we have to consider only other normal income and not the exceptional income, because the exceptional income will be, not be repetitive, and it will change every year depending upon what are the exceptional items. Okay. So for understanding what is exceptional item, suppose the company sells some shares of other company suppose this company has made some investments and they have made some capital gains or suffer a capital loss, or if the company has a vacant land which it sold and earned some income on that, so that will come under the exceptional items. Or if the company has, done a VRS, that means it is downside its, employees, and they have paid some compensation. So it will be an exceptional item. So because this occurs only, not every year, but it may occur as a irregular phenomena. So any expense which is of an exceptional item will be given separately. So while calculating, you have to be cautious that at the moment what I have done is that I have, included everything here. Okay. So you don't have to make up this thing. So just say other income here, whichever is given, including exceptional income. So what is the other income? 700. Mahalakshmi, anyone? Srishti?
Sir, it's 703.
703. Okay. Now interest. So tell me, what is interest? So again, if you just browse below the profit loss account, you will get the interest.
1682.
168.
1682.
1682. Okay. And what is depreciation?
Sorry, sir, I saw the other column. It's actually 1651.
1651. Okay. And what is depreciation? Look at
4015.
this 40515.
Yeah.
Okay. So then we have the PBT, that is profit before tax. Okay. So that means, this, I think the formula I should have captured, plus the other income minus the interest minus the depreciation. Okay. So it will have 8916 profit before tax. Okay. So we can always check that it is coming 8961. So 8961 will be profit before tax will be 8961, 8816. So where is the mistake? It is coming.
I think I told the values for March 25
I'll just
was.
check. I'll just check here. What are you saying?
Yeah, I told the values from March
You have to just read the
2025.
TTM number. Okay.
Yeah,
So tell
yeah.
me what is now just tell me the revised numbers.
Instead of 1651, it was 1682, like how
1682
it was before.
and
Yeah,
depreciation
4128.
4128. Okay. So now it is coming exactly the same number. 8817. Is it matching? It's okay. It's almost more or less the same. Okay. So then the EBITDA. EBITDA is basically earning this plus depreciation plus interest, isn't it? So this is the EBITDA. Okay. EBIT is basically this minus interest, isn't it? Fine. So EBITDA and this thing. So EBIT will be basically earning before interest and tax, which will be basically if I see the formulas again here, sorry. Okay. So this is EBIT. Okay. EBIT is, if you just see the formulas here, it will be interest, depreciation. So profit before tax plus interest and depreciation is EBITDA. So this is the operating cash profit of the company. Then we calculated the EBIT. Okay. So EBIT was basically just remove the formulas here. So EBIT will be earning before interest and tax. Before interest and tax. Okay. So which will be basically, so we know what is the profit before tax plus the interest. Okay. So we get EBIT of 10,000. Is it okay, Srishti? So it is 10,000,
Yes, sir.
49119. I can just check, my filled one. 10,000. So it is 10,000 this thing. So EBITDA is this 14,627. Okay. So what I'm doing is basically I'm just going to this place. Okay. Rather, I go back to the sheet, which is the template. Fine. So this is, I think, slight this thing, but anyway, a profit before tax. Profit before tax will be your profit before tax will be so. So now profit before tax is to be calculated. So we first fill up the PAT. Okay. So we go and we just punch the number here. Okay. So profit before tax, we are just directly picking. Okay. Net profit 6,884. Okay. 6,884. 6,884. So we are not using a formula here. And then the PBT, profit before tax. Okay. So which is basically nothing but this one only. Okay. Fine. So the tax will be this minus this. Okay. So you will have the tax will be basically calculated by taking the profit before tax and PAT, and difference will be the tax. So I can just, what I can do is I can just copy and see from the earlier sheet where I have done already whether I've done it right or wrong. So I'm just copying all this. Okay. To just check whether everything is tying up, which I have done earlier. So I'm just putting in a Grasim in this thing for paste special, only putting values without any formulas. So we have, so it's all matching. Yeah. So everything is okay. Is it okay? Have you got it? Sikka, Ashwin,
Yes,
Ananya.
so yes.
So what we have done, we have calculated the PAT. We have calculated, everything. So now we come to minority interest, minority share. Okay. I'll just explain you, but I'll just do from where to get this number. So, so go back here and just, just open up this. So we have a minority share of -1 here. Of course, on the TTM, the thing is there. So we are just taking this number as -1 here. Okay. So -1 and then exceptional items. Okay. So exceptional items also we'll pick up from there. Of course, TTM details are not given. So just we are just putting this number, assuming the number is same, because they are going to make a big difference in our calculations. So it is, minus 46. Is it minus 46? Okay. So adjusted PAT will be this plus this plus this. So it will be 68337 So if we just look at here and find out the number, so it is adjusted PAT is coming here somewhere, okay? Profit for PE, okay? So it is 6085, okay? So let's go back here.
Sir, I have a question regarding minority shares. What does -1 represent? Like negative share?
Nee, minority share, this is basically a profit and loss item, okay? This is a minority share. That means some of the profit belongs to the shareholders who are not the shareholders of Ultratech, okay? Fine. So I'll just repeat this. Who asked this question?
So
Shrishti,
Srishti.
you know, what happens is that when we make a balance sheet of a company like Ultratech, okay? Now, if you just go to Ultratech here, so it's good that you're asking questions. Of course, you have to read all the classes. And I think by somewhere I have explained this also, okay? Now, if, you know, you go to, for example, profit loss side again, okay? So this is, you know, this figure is consolidated. If, you know, Ultratech is having any company as its subsidiary, it will be clubbed with this. The sales will be the holding and subsidiary company put together. So if I say, now look at the sales number, okay? Look at 77,000. I say view standalone without the subsidiaries. So the number has reduced from 77 to 72,000, isn't it? So all the numbers are going to change, the profit before tax and everything, okay? So when we say consolidated, so that means all the minority shareholders, I mean, suppose when you are doing a consolidation, so because this company who has another company as subsidiary may not be having 100% shares of that company, okay? Suppose it has 60%, okay? So it means that, you know, that company has become a subsidiary. So while doing the consolidation, it will add 100% of sales of that company, 100% of the profit of the company. But since it is holding only 60%, so 40% of the profit belongs to the minority shareholders. Okay, so that profit has to be removed. So for calculating, for example, you know, it is very evident in case of, you know, for example, let's go to the peers here. So look at Grasim Industries, okay? Fine. So this comes very clear in Grasim Industries, the whole thing. Now, Grasim Industries, when you go to the profit loss account of Grasim Industries, okay, so we'll fill up the Grasim Industries numbers, okay? Just help me and you'll understand. The sales number is 153,327, okay? So because Grasim Industry owns Ultratech, almost 56% of shares of Ultratech are owned by Grasim, okay? So here, you know, it will come absolutely, you learn, you know, why we are excluding the minority share and understand the logic of that. So what is the operating profit, Shrishti, of Grasim?
153,327.
327. Okay. Other income?
Just a second, sir. I'll open it.
आप बस open करके रखो. हाँ.
Sir, but the question also was that why is it -1? So does -1 mean that like
Absolutely,
Ultratech is paying
Shrishti,
that
I'm going to
out to
explain
someone
that. Okay,
else?
just let us fill up Grasim and then
Alright,
you
alright.
understand. Okay.
Understood.
So Grasim operating profit is 15 lakhs 33,000. Is it?
So I'll just
Check
open
the
it.
numbers
Give me
again.
1 minute.
What is the Grasim operating profit?
No. Operating profit for Grasim is 30,393.
30,000?
393.
393. Okay, fine. Okay, now what I'll do is that, if you just speak out, I'll just open the tab where I have filled up everything. So operating profit was 28,000, okay, but the things have changed, the numbers have changed when I last entered. So that means numbers have changed. Okay. So here the TTM number is, so I have shown how much, 28,262. Let me just see. Okay, so maybe that I have not entered the TTM number. Okay, so that was my mistake. Okay, so just enter the TTM number. So we'll enter fresh numbers. Okay. Okay, other income?
Other income is 1637.
1637. Okay. And interest?
Interest is 13,180.
13,180. Okay. Depreciation?
6,745.
6,745. And the PBT number will be just the formula here. Okay. Fine. So then EBITDA will also be coming from here. Okay. Then EBIT will be also coming from here. Then PBT will be also coming from here. Fine. And then PAT I have to enter. So what is the PAT?
So PAT is
8,575.
75.
So I can just populate the tax number because in screener tax is given in percentage. Okay, fine. So we have to calculate the number. So that's why we are doing it. Okay. Now, so what is the PAT? 8,575. Now just look. We go to the screener. So that is we have gone to what, Grasim? Okay. So the PAT was 8,575. Okay. Now just open this thing. So minority share is 4,051. Now the corresponding number here is not given. Okay. So since the sales have gone up, so we could have made some change here, but we are just keeping 4,051 here and 52 minority exceptional items. Okay. So what all is filled up here? So we have, the minority shares, exceptional items after tax, then profit loss exceptional items is given. Okay. And then profit for P. Okay. Fine. So just we enter the data here. Let's look at the data here first. Minority interest. Okay. Exceptional items and exceptional items and minority. So tell me that number. What is the exceptional items? What is, first minority share?
Minority share for March 2025 is minus 4,051.
4,051. Okay,
Yes,
so
sir.
it's written minus?
Yes, sir, minus.
Minus. Okay, sorry. And what is exceptional items given as?
52.
Minus positive. Okay.
Positive.
So if I add this up, so we have 4,576. Okay, I just hit PAT. And now, of course, we have taken, because this is the TTM number, and then we have taken the 25 number for minority share. Okay, so that is a little bit mismatch. Anyway, now what happens is, to explain this, now Grasim also there's a minus, and of course Ultratech is also there's a minus. Now the PAT 8,575 crores of profit belongs to Grasim and its subsidiaries, isn't it? Now Ultratech, Grasim owns almost like 56% of Ultratech, so which is given in my slide here. We can just go and see here. So somewhere I mentioned that. Okay, so I think somewhere I've mentioned, so I'll just search and find out that. So let me just be on the slide here. Okay. So now, which means that Grasim, owns 56% shares of Ultratech. Okay. So there's about 44% minority shareholders. Now the PAT has been consolidated. So 8,575 means 100% profit of Grasim and 100% profit of Ultratech. So what we are doing, we are taking off the minority share profit so that we know how much Grasim has, made the profit, how much Grasim standalone has made the profit. Okay, fine. So similarly, the exceptional items, because they don't appear every time, so we are trying to find out the PAT, which is 4,576. Now, if we just come here, okay, and make a here, so just we enter the EBIT of Ultratech and other companies. So just do that first. For two companies, we are going to calculate the ratios. Okay. Then we have the third one is the earnings. Okay. So we are just populating the earnings figure for Ultratech as well as Grasim. So Ultratech so adjust profit. So look at the last number. Okay. Fine here. Fine. And then we do the same thing for basically for Grasim Industries. वो तो नीचे ही था ग्रासिम का एबिडा. Okay. And EBIT. And look at the earnings of Grasim. Okay, then I think I've done small mistake here. Here it should be 6,000 something. Okay. So we have, these numbers here, the sales and EBITDA, EBIT and earnings. Okay. So here also TTM sales we can fill up. What is the TTM sales of, just enter all the numbers of this company, Grasim Industries price. What is the price? Shrishti?
Yes, the price of Grasim is 2,804.
804. Okay, market cap?
The market cap is 190. 817.
817.
Sir.
What is the
Yes, sir.
enterprise value? Just look at this thing from the screener. Or just calculate.
Yes, sir.
Let me know. Just know what is the market cap plus the debt.
So the enterprise value is 369.
You're telling me straight away the enterprise value? 369.
237.
Since the company, and what is the sales?
Sales TTM is 153.
153.
327.
Is that okay? Enterprise value is
Yes, sir.
369. Let me just check. Enterprise value was 369. Yeah, perfect. So let's go back here. And then, we do is that we just, calculate price to book. So this is basically we just add the price, which is nothing but the market cap divided by, no, not price to book, but price to sales, sorry. So market cap, price to sales, okay? Price to sales. So price is market cap, okay? Take the whole number divided by the sales. Okay, so you get 4.78, okay? And then EV to sales, which is, EV upon sales. Enter 5 point. So then we get EV to EBITDA. EV to EBITDA. Okay. Then we have EV to EBIT. EV to EBIT. EV to EBIT. So we get this number. Then we get price earning ratio, which is basically the market cap upon net income. Market cap upon net income. Okay. So you get this. Fine. So now just go to the screener and let me know and enter and tell me what is first price to book, and then we'll check all these ratios. Shrishti, what is price to book given under this thing?
So it's given 1.96.
1.96. Okay, we are just entering directly. Okay, now how do we calculate price to book? Basically, we go to basically now For that, we go to the balance sheet. Okay. So price to book. Now, either we just take these two numbers, that is 136. For example, we go to Ultratech. Sorry, we're trying to calculate Ultratech. Okay. So Ultratech, go to balance sheet. Okay. So which is price to book. So either we take all the assets minus the borrowings, or we just add these two numbers. So which is the book value? 295 plus 70,412. So it is 70,000. So I'm just making a calculation here on my calculator. Okay. So it is 295 plus 70,412. Okay. So it comes to 70,707. And then we have the market cap. We know that. So we just straight away go to the sheet, our sheet. So what we can do is we can just enter this price to book, okay, which is basically nothing but the market cap divided by 70,707, which is basically the share capital plus. So we get 5.25. So what was the price to book ratio given in the screener?
So for
For Ultratech?
Ultratech, it is
So
given
you get
5.25 only.
5.25 straight away by, you can calculate also that. You take the market cap divided by the share capital plus reserves. So you'll get price to book simply. Is that clear? So price to book,
Yes,
the
sir.
formula is basically if you just go to, your Google and say price to book ratio, price to book ratio. Okay. And see what is the formula. So price to book ratio is what? The market capitalization. So we have taken the market cap divided by the book value of equity, which is nothing but the share capital plus reserves, or other way, you can take all the assets minus the liabilities, borrowings. So you'll get book value of equity. So there are two ways to calculate the book value of equity. One, through only taking the share capital in total. That means the share capital plus reserves, or you take the assets minus the borrowings. Okay, so you'll get the same thing. Is that clear to everyone? Should I repeat? Okay. Now price to
Yes,
sales.
yes.
So look at price to sales. Okay, how much you're getting price to sales on the screener? Christy?
So just a second, adding that it's getting
So you're getting
4.78.
4.78. So that means what we have calculated is right. Okay, by taking the market cap and dividing by sales. So we have also got 4.78. So what I'm doing, I'm just opening this screener on my mobile so that I can also see. Okay, straight away. So I'm just opening the screener on my this thing, mobile, so that I can also see at the same time. Ultratech. Okay, so this, because since I'm not logged in here, so I have to look at here only. So Ultratech price to sales. Okay. So price to sales is how much? Which is given as here, price to sales 4.78. Okay. So we have got the same. Now we calculate the other ratios, okay, and see whether we are getting the same. So then we have EV upon sales, okay. So EV upon sales is how much? 5.06, okay. I think EV upon sale is not given in the screener, okay. EV upon EBITDA, and now let's say PE ratio, it is 54.3, okay. So let's just check PV ratio. So we have the PE ratio is 53.6. Okay. So we are almost there. Then we have, EV upon EBITDA, which is 26 point. So enterprise value to sales is also there, 5.06. Okay. So 5.06 we are getting. Okay. EV EBITDA is also like 26.9. So here also we can just check where we are getting 26.8. So we are almost there. Okay. Fine. Okay, now what we do is that we just copy all this. Okay. Or just copy this here, copy this here, copy this here, copy this here. Okay, so now we have these ratios for Grasim Industries also done. So price to book ratio is 2.70. So just text Srishti. Anyone, please? Mahalakshmi, Mananya, Ashwin, please just participate and let me know what is price to book given in your this thing. So price to book is basically, oh, okay. Now the figure needs to be changing here. Okay. So it is not 70,000. So we have to just go and put the right number from there. So we have, a peer group and go to Grasim Industries and check the balance sheet. And the number is 136. Okay. So calculator 136 plus 97,373. So it is 97,000. So it is 97,509. Okay. So it's 1.96. So how much we are getting there, Shrishti?
1.96, sir.
So price to book
It's
ratio is
matching.
1.96. Okay. Now look at the more important. Look at the P ratio. How much is the P ratio? 45.6. And how much we are getting? So what is the P ratio there? Okay, we are getting
45.6, sir.
41. Okay. So which is, let's go and see the formulas here. The formula is basically the earnings, okay, 4576, okay, upon just remove the formulas. So, and which is basically this thing of the income, which is 4576, and the market cap, isn't it? So market cap divided by, and market cap is, when we go to here, the market cap is okay. The net income, if you look at here, the net income, if you look at here, is, 76, and then we look at for the PE ratio, it has calculated 3681. Okay, 3681, and our number is different, okay, because we have taken the TTM number. So 3681. Let's just plug in and see how he has calculated 3681. So let's see if we take earning as 3681, the last year number. Okay, so it will be 51. So maybe because we didn't have the full details of TTM, so we are getting around 41. So fine. So that's why the number is different, because we have, while calculating the income, if you look at the here, we have we need to we should know the exact minority share here. Okay, fine. But we have taken the last year minority share. Okay, for that, to know what is the minority share, what we can do is we can just go to the annual report of Ultratech. Okay, this I'm just you don't have to do it. I'm just going to show you, why the difference is coming, because we have to get the right